Hey, real life traders from all over the world. This is Jeremy Alexander Newsom with Real Life Trading, trying to mix it up a little bit. I'm actually going to make you guys a review for today. So the market isn't even open yet, which I haven't really done, just kind of experimenting with. Well, not really experimenting, just trying to, tweak it up a little bit, throw some variety your way, and keep it interesting. So doing a review before the market opens, and what I'm going to do and mostly talk about today is the importance of the hourly chart for day trading and swing trading. And what I'm going to look at, I have the iShares NASDAQ Biotech up, and we're just going to take a sneak peek of this on the hourly. And for swing trading, day trading, or longer term trading, the hourly chart is very, very beneficial and really solidly used to kind of help time entries and kind of help understand, are you chasing or should you wait, or how aggressive should you get into this trade. So this is the IBB, and again, you can use this analysis if you want for what could happen in the upcoming market here very soon. So the hourly chart is a chart that I like to look at to say, okay, what are the gaps looking like? Who's trapped? What kind of candles is going on? And specifically, what are the gaps doing? So on the hourly chart, you will see a lot of gaps, and that will help you really kind of throw you in the fire, if you will, to determine and understand the importance of the gaps and what gaps mean. So let's look at the gap that happened just a few days ago on the IBB, and let's look at it on the hourly chart. So we had a black candle gap down. What kind of candle? I'm sorry, what type of gap is that again? That is a retest gap. Exactly, bearish retest gap. So what does that mean as a trader? Well, that means that you could wait for a retest before getting in bearish, if that's your objective. So notice, you can see in the early morning, there's a little bit of an upper wick there. So there was a retest there in the morning. And then today, you can see the stock did trade up higher, pretty much exactly where the open was yesterday. So if you're like, oh man, I didn't get a chance to get into the trade yesterday at the open. Well, the stock did almost pull back to that open. So you could have had a limit sell order there with a stop right there and kind of play it that direction. So let's talk a little bit about today, the upcoming market. What can we do today? Well, again, understanding the hourly chart, you'll kind of see that the volume is declining a little bit, and we're getting a little bit of a pennant pattern looking thing. So if the IB were to gap down and open below, let's say 323.82, you'll notice that anyone who bought on that hourly candle and that hourly candle, they would be trapped. So likely that would be a pretty bearish gap, one that you could take bearish. Now, in the same instance, you really could keep your eyes on a few stocks, maybe 30, 40 minutes before market opens. You could check some futures or check what the stock is printing at after hours. Right now, IBB, let's see, so it's up 9 cents. So nothing too crazy yet. But if it's up, $1 or so, you can really factor that in and again, kind of understand the gaps. And even if you're a trader who works full-time or have the job full-time, you can set contingency orders depending on your broker for certain prices, especially with option trades. So I'll give you an example. You can, if you trade in interactive brokers, you could say this exact setup right here. You could have two triggers, and you say if IBB is below 325.39 but above 323.82, then and you can also have even a time order in there as well. So you can say if IBB is below 325.39 and above 323.82, and the time is the first 15 minutes of the market, then buy puts and place my stop at 330, place my target at 319, and you walk away from the trade. And the reason you could do that, and you can set all of that up to trigger. Now, some brokers can't do that. Most of them cannot. Interactive brokers can. But even with stocks, you can always set OCO orders up, order cancels order, and you can put in bracketing time frames as well. So you can do that with shares. That's actually pretty common through most brokers. It is a little bit different with options. And I know IBB is a pretty expensive little thing. But just something to keep in mind, and just understand that the hourly chart can be very conducive to help you understand where you're going to look to buy, where you're going to look to sell. And again, for a future trade, you could have an entry that, all right, I'm going to go bearish if IBB pulls back to 3 34.08, right? Black candle gap down, so retest gap. I'm going to go bearish there. I'm going to place my stop here, and my target's down there. And you base that again on the hourly chart. Let's use this same analysis on SPY. So here's the SPY, and here is again the hourly chart. So notice, let's use it kind of back in the day. Black candle, gaps down. So it's a retest gap. Okay, it's a retest gap. What happens? Well, stock trades down, trades into a target. So, how do I know it's a target? Well, it's the same place that it bounced last time, right? Bounced there last time and bounces there again. So you could have said to yourself, all right, well, it's back down this area. It's a retest gap, so I'm expecting some retest to come in. So you could buy maybe some calls or buy some shares and place your stop below the support and anticipate a bounce or filling of the gap, which is obviously what happened. Back from over here, again, hourly chart, black candle gaps down, retest gap, you expect to retest, pull in, boom, boom, boom. Same type of thing. So again, let's look to the future, right? A lot of you guys are like, well, that's hindsight, Jeremy, that's easy. Okay, cool. Well, let's talk about this morning. So the SPY, well, yesterday, or the day before yesterday, you had a little bit of a double bottom on the hourly chart, and you could have had an order that said, okay, I'll buy at the neckline, I'll place my stop down here, that's your 1 R of risk, and then your ultimate target is up here somewhere, right? So 1 to 4, 1 to 5 risk reward ratio. I did talk about that earlier yesterday in the morning trading room. So today, the SPY, let's say the SPY is opening at 202.82. What could you do? Well, again, you could have a contingency order as a retest gap. Now, again, notice the lines on my screen. My lines might be different than your lines, but we could say, okay, I have a support at 201.85. So I'm going to use that to my advantage, right? That's my support level. So I'm going to go ahead and say if it gaps up, which again, limit buy, we can look at some futures of what could happen. And again, right now the SPY is up, I think, very little. Yeah, 0.34. So it's up a little bit, not much. So let's say it's gapping up and opens at 202.75, wherever the open might be. Pulls back, right? And you have a limit buy. How do you know? You don't, right? You have no idea if that trade's going to work. But what you could do is use the hourly chart to understand the candles, the color of the candles. You place your stop below the pivot. That's your trade setup. White candle gaps up. I expect the retest. I'm going to do a limit buy, and I expect this gap to fill a little bit more. How do I know this gap might fill? Well, black candle gap down, trade to this support. Black candle gap down, trade to this support. It's the same thing that's happening over here. I'm not saying the exact same thing is going to play out, but honestly, if you want to look back from just the other day, that's exactly what happened. Stock gapped up, traded down, could bounce, and could make you enough money to pay for your car payment or your house payment or your house and car payment or pay off some student loans, right? That's what real life trading is about, taking trading and applying it to real life. So for my swing traders or even my day traders, the hourly chart is a really, really important time frame. Now, going back in between the hourly and the daily, you have the 2-hour time frame, the 3-hour time frame, the 4-hour time frame. You can use those time frames as well. It really all works the same. The hourly is just really kind of the more, I guess, commonly accepted one, and it's just I don't know, something that you might be interested in. So along with this particular video, I want just to say thanks so much for watching this, and for all the YouTube fans and subscribers, thanks so much for your support. I hope this video was beneficial and helpful. Hope you absolutely crushed the market today. Enjoy your Wednesday. I'm also going to include a link in the bottom of this YouTube video and in the email if you're getting an email from me. I do have today, I had the opportunity of being a part of something called MarketFest. It's 5 really well-known, really popular, super big traders who are going to be sharing some of their strategies and their stocks that they like and the systems that they like. So make sure to sign up for that, register for that. It is entirely free. I'm sure everyone here is all excited about education. I like educating myself. I'm going to hear what these guys have to say. I personally am coming on about 1:45 Eastern, and I'll be explaining the same type of thing, right? Stocks gapping up, gapping down. I will be analyzing the stock market while it's live. So make sure to be there just for that. So maybe you can pick up on some tips or maybe pick up on some stocks. And I will guarantee that I will put one trade out there tomorrow live during that market webinar, which we can potentially follow and see if it works. So be there, register, it's totally free. Thanks so much for watching this real life stock review, ladies and gentlemen. I really do appreciate it. Hopefully it was helpful. I'll see you Friday in the next review, and until then, remember, love life, live life, and trade. See ya.